Welcome to the Cars and Credit Program with your boy Bo Knows. Today I'm going to be discussing 10 things you need to know prior to purchasing your next vehicle. Let's get it. Welcome back. So the first question I normally get, people ask me, where do banks normally pull from, meaning what credit bureau, and what is the difference between the credit score? Because when I log in, I see different scores, Bo. Help me out here. Great question. So first part of that question, where do banks normally pull from? It really depends. It's on you to kind of exercise due diligence. I'll be dropping some more videos breaking down who pulled from Equifax, who pulled from Experian, who pulled from TransUnion. Just keep that in mind. You got three options. The fact that you got three options, you want to pick your very best one. Why your score different among the three? FICO scores, let's talk about that. Equifax, Experian, TransUnion, FICO, because they all do different things on each report. There are different repositories or different credit, different debts, different things that's being reported on Equifax, Experian, and TransUnion. Hence why one score is higher, one score is lower. So basically, if you got a lower score, that's because you may have collection accounts on there, more collections, more negative information. If you got a higher score, it's because you got more positive information. The second part of that question is, why the score is different when it comes to other, say, credit monitoring sites, Credit Karma, Credit Check Total, Identity IQ, Experian, Equifax, just to name. There are all different companies that are composing or compiling information to generate you what's called a FICO score. Some use FICO score, some use Vantage score. So Vantage score is different than your FICO score. For an example, if you got a Vantage credit score, that's mainly your Identity IQ. That's also mainly your Credit Karma. So those are your Vantage score, which is why the scores are different versus the FICO score. So if you pull your credit with, Experian.com or CreditCheckTotal.com, which is owned by Experian, those are FICO scores. So that's the difference of credit score. I know that was a pretty much long answer. I can get into more details typically about this one question, but I'm gonna move to the next. Again, check me out, follow me, like, share, comment. What is an auto score? So now this happened to one of my clients just recently. So what is an auto score, right? So now you got FICO that's developing these different products, these different programs that they're selling within their FICO module. So FICO offer FICO 8, FICO 12, FICO 10. They offer home scores, they offer auto scores. So that's what that is, right? So some lenders, depending upon where you go, may just pull your FICO score. I had a client at one point, added some trade lines, and I'm gonna talk about that too, how trade lines can really help. So I had a client add some trade lines, their FICO score jumped up, it was about a 7 something. They went to purchase a vehicle only to find out that their FICO auto score was in the 500s, So some banks use FICO auto score, so there's something to really know. So you need to kind of exercise due diligence or pay attention to the show, because I'll be dropping Jews. How much should I put down on my vehicle if I'm trying to purchase a new car? Now that varies. That's a good question. And the reason why I tell people kind of think about what you're getting, think about, how much you're trying to pay. Because typically for every $1,000 you put down, that's a $20 difference in your monthly payment. And of course, the better your credit score, the better you are. Let me give you a quick example. Say you're buying a car for $30,000, right? Some people say, I'm gonna put $5,000 down. Well, I don't know if that's a good idea, but me personally, I try to put less as possible. You wanna use OPM, other people money. That's the bank money. So here's an example. If you're finna put $5,000 down on a car, it's costing you $30,000. First of all, that person that's selling you that car finna make a hefty, profit off their vehicle. Cause see, sometimes people can go in there and negotiate. You follow me? And hey, I want to purchase this vehicle, and they can negotiate with no money. A lot of clients don't know that. They go in there thinking, oh my God, this is my first car, second car, my credit bad. So they be feeling inferior in a sense to the car dealer or the sales agent or the sales rep. Me personally, not at all. You got multiple options. Think about it. If this car dealer or car lender is not finna get you financed, go to one down the street. Go to one across the street. Look outside. How many car dealers do you see? So that's something to consider. You follow me? So if you put down that $5,000 and you say your payment dropped from $500 to $400, is it worth it to you to have $100 a month payment less versus $5,000 more down? To me, it wouldn't be, because I would take that $5,000, put in the stock market, probably make 10% a week, 15% a week, whatever it is. You can do a lot more with $5 grand and pay $100 versus $5,000, and you can say make $200 or $300 off your $5,000. Now you can pay that extra 100 that you wanted to pay towards your car note, and you making some profit. So keep that in mind when you're going and thinking about putting down large amounts of money on a small vehicle or a small loan amount. Just consider that. Next question. Now here's the fourth question, right? And I get this a lot. What is a good interest rate? Now that's a good one. You know, some people go buy a car and they tell me, I don't even know what my interest rate is. I'm like, what? You didn't ask that question? You don't think that's important? Why does that matter? Because your rate can carry you a long way. Think about it this way. Anything in the double digits could be potentially high for certain people. That's why credit is important, trade lines is important. So a good interest rate is a single digit interest rate. Anything that's 20% higher, 15, 13, 12, those are kind of astronomical. It just depends on the person. For me, I like to be 2, 3, 4, even 0% interest. Some of these banks, when they're trying to get rid of a car, when they're trying to kind of roll off something, they got an older vehicle that came in, they got the new line coming in for 2023, 2022, they're trying to get rid of, they do 0% financing. But then you need good credit, right? So what that means is you're not paying any interest on that vehicle. So if that car costs you $50,000, it's going to cost you $50,000, and if you got a higher interest rate, right, and that particular car is costing you $50,000 and you financing it at 10, 15, 20%, I get more in details with exactly what you're paying, but you could be giving away $20,000 in just that car. I got a little document that I put together, a couple things we put on our site that shows if a person is financing a $23,000 vehicle at, say, 3% versus the same person financed a $23,000 vehicle at 17%. The person at 17% over a 60-month period will probably pay about $500 a month. The person with 3%, whatever percent I just mentioned, will probably pay about $300 a month. So that's roughly like $200 a month that you're giving away because of poor credit and having higher interest rate and not really fixing your credit and throwing trade lines on there. Very critical to know because the interest rate is important. The better your rate, the better your car. You want a better car? Get a better rate. That means you can step up to a $60,000 or $70,000 vehicle and be comfortable paying $500-$600 a month if that's what you're trying to stay in. And this is another question that I get a lot. A lot of people ask me, what is better, to lease a vehicle or to finance a vehicle? That's another good question I get from a lot of my clients. Well, me personally, it really depends on the individual. If you driving a lot, if this your first car, your second car, third car, all of that matters. So leases are good for cars that are expensive. You follow me? For me, this is my take on it and what I think and what Bo believes. So if you financing a vehicle that's $100,000 or more, right? They got these lease programs that allow you to drive that vehicle and you don't get as many miles. So that's why I said it matters on whom the driver is or the purchaser is, right? So if your second or third car, you want a nice car, you don't drive it as much, you want to take you and your lady want to go out, you got whoever that is. Now you got this nice vehicle you can pull off from time to time. You're keeping it in good shape, which is what the lease about. They only give you so many miles a year, roughly maybe 10,000 miles a year. So if you're not driving all over the place in this car, that may be a good concept. They got a small down payment that they sometimes charge, and sometimes they don't have a down payment. It just depends on the person's credit. Also, your monthly payments is what's actually the cheapest. So you can get a nice car for a little bit of money. You don't have to pay, say, $1,000 a month for this nice Mercedes that you're looking at that costs $110,000 bucks or $110,000. You follow me? So you got that concept there, and that is good. Or when you purchasing or buying a vehicle, like if you're driving a lot of miles and you want this to particularly be your car, you're not planning on trading it in no time soon, say the next year or two, then it makes sense to go and purchase that vehicle because you're going to be driving it more, putting more miles on it. It's a work car, whatever the case may be. Those lease cars is almost like renting. I would say leases between renting and owning. You know how you go rent a car, you paying XYZ, it's not yours. They do all the maintenance, all of that. Same concept with a lease, but you got to keep in mind it's mileage driven. You got to take care of the car, and it only makes sense in that case. And also, if you're trying to trade your car in like most people do, they want to have a new car every year or whatever the case may be, then the lease purchase might be the way to go for you. Speaking of lease, I also get this question. If I purchase a vehicle over $100,000, what would my monthly payment be? Kind of to piggyback off the last question, you can have a high payment. Anything over $100,000, $200,000 vehicles. People probably wonder, well, how this guy got this Lamborghini or got this Rolls Royce, I got this Phantom. I help clients get all of that. So I can break that down. And just to break it down real quick, they got different finance terms, right? It's almost like purchasing a home. When you purchase a home, how long you got to pay your mortgage, right? You got 30-year amortization, 40 and 50. So that way you can buy $1 million home, $500,000 home, and your payments will still be around something comfortable, 2,000-3,000 a month, whatever they may be, because you can spread out the term of that particular loan. You got terms. So that applies in the vehicle financing. A lot of people may not know, but some banks go up to 120, 150 months. So now do the math. If you're buying a car that's $150,000, right, and you can finance this car for 120 months, right, what's your payment? If it's 0% interest, just throwing out some numbers for arbitrary reason to keep it simple, you'll be paying $1,000 a month, right? Makes sense. Now, if you only have 60 months to pay that car off, which is typically the long term, then you might have to double up in your payments. You got to pay $2,000 a month. So you get the concept. The way that you can spread it out makes it more affordable, which is make it more easy for people to drive such fancy cars that they want, dream, and like to take advantage of. Next question, and which is another good question. If I'm upside down in my car, how do I get right side up? This is a tricky one, but I got the answer for you. So say you purchased a vehicle 2 years ago, right? You got this car, you needed it. So I'm gonna buy here, pay here. They charge you an astronomical amount over sticker, blah, blah, blah. Your interest rate was high, so every monthly payment is going towards interest and not principal. You paid $25,000 for this car. 2 years later, you still owe $25,000 on this car, and the car worth 15 grand, right? That's a big gap. But here is some of the things that you can do to kind of improve that. One, the better your credit, right, your next deal will benefit you. So if you got to get rid of that car, trade that car in, they only finna give you $15,000, right? Now you got $10,000 you upside down in. So the next car you get, they're going to take that, whatever the car that you purchasing value amount is, say another $25,000 car, they're going to put that 10 on top of that 25. Now you at 35. So you constantly in that hole. The best way to get out of that is, one, try to find someone that's willing to take your car and pay you more or less a higher amount. So if you trade your car in, tell them, look, hey, I'm upside down. Y'all only giving me $15,000. You're going to make 20 off the car, right? Because that's what they normally do. Get you a good sales guy and say, look, give me more money. Give me that 19 or 20 off this car. And then the next car that I buy, maybe give me $3,000, $4,000 off. I'm trying to get up out being upside down. I shop with you a lot. You my car person. You my car guy I go to. I bumped and ran into some hard spots before. Had to get this high interest rate car from this buy here, pay here lot. Whatever the case may be. Your key is to negotiate. You follow me? So you can negotiate these numbers. So now when you get this other car, they gave you more money, right? 20,000, you owe 25. And the next car you get in 25, they dropped it down about 22 or 21. Now you only putting a couple thousand on the back end. You see what I mean? So those are some of the benefits and things that you can do. And credit really plays a role in it, because the better your credit, the better you can get a better rate, which now you're paying more principal than interest, and then also negotiate your price of your car. You follow me? And if you need help with that, contact us. I got a lot of dealers in my platform. These guys will love to work with people that's upside down. We'll work with you on your credit, all the above. That way you can get the car you want, the car that you love, and around a payment that you can afford. Where's the best finance company or bank to go to get a car or vehicle loan? And also, what is a good interest rate? So I kind of spoke about the interest rate earlier, but some of the best place to go would be wherever you have a relationship at. I got clients that done built relationship with banks. I done built relationship with banks and bankers, loan officer, etc. These are your key people. Don't get it wrong. There's places online you can go and apply for a car, Capital One Auto Finance and etc. I can name a few of them, and I will kind of do a video, maybe breaking it down. Just let me know what your interests are. But the key is relationship banking. If you got a bank that you got a good relationship with, those are the particular places you want to go and perhaps, ask them, hey, I'm looking for this particular vehicle. Who you guys pull from? Remember I spoke about that. We pull from Equifax. Your Equifax score the highest. Great. You follow me? What is your rate? With a score like this, we give you a 3.9. Great. Okay. Now you got your particular lender that you done business with that's willing to finance you that car. So your biggest bet is the relationship that you built with that particular bank. Other than that, credit unions are fantastic. What would my insurance be based off of the type of car that I purchased? That's a good one, because you got to understand this. Some cars are looked at as luxury cars, fast cars. So they kind of tax you on it. So keep that on mind. So if you get a car that's a certain color, it's a fast car, let's say a Scat Pack or a Hellcat or a Demon. I know you guys like them cars. But insurance is kind of high. Why? Because the cars are getting stolen a lot. A lot of people like the motors in them vehicles. So think about that when you purchase a car. How high of a demand is your car, right? Think about the color. Red car insurance, for whatever reason, is higher than your typical colors: white, gray, and black. Those are the standard colors, right? In the car industry, those are the ones that get, for some reason, the insurance company prefer to insurance them for less amount versus a red car, orange car. So when you get into these colorful cars and these fast cars and these exotic cars, keep in mind your insurance gonna be kind of up there. And don't get a car that has both luxury and speed. Trust me, I know you're gonna pay a lot more because you're gonna pay for both of that. So keep that in mind. And then again, build relationship with insurance companies, insurance agents. I know some of the good places to go, that will insure your vehicle for real and cover you in the event you run into a problem. What if I already have one or two vehicles? How can I get another one? That's another good question. And I have clients that pretty much, basically, I ain't gonna answer this question. Contact Bo Knows and we'll let you know. Just kidding. But to keep it simple, I have people that I didn't help that have one vehicle, two vehicles, and then they got a third vehicle. It's different things you got to look at, different factors. So if you have a vehicle in your name and the car kind of ran into some problems and it's not running anymore, and you had to go get a second vehicle, but this car's still on there, they never picked it up because it was in repo status, you never turned it in. I got people that run into all different type of scenarios where they went and bought a buy here, pay here car the second round, and then the third round they came to us and they got what they wanted. So I have people that have 2 or 3 vehicles in their name and they was able to sell their prior car or lease it to a company that's doing transportation and need a vehicle. So Bo knows there are ways to get up out of things that you're in. Don't let credit bring you down. Don't let credit have you feeling like you're not worthy. Don't let credit change your state of mind. It ain't nothing but numbers, and we can get those numbers up. Bo knows. See you on the next episode. Bo Shemita, Bo Entertainment, Bo TV, Bo all the above. Baby! No, just bullshit.